All right, excellent. Welcome everybody, and thanks, Reed. Today I'm going to be showing you our winning momentum strategy. Now before I get into it, let me just tell you a bit about us here at Trading Wins. We are a group of pro traders, well over 30 years of experience. We're actually real traders and teachers, and we've been developing our own systems and strategies over many, many years and teaching people around the globe from complete beginners to experts. Now in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here at Trading Wins use on a daily basis. I'm going to tell you exactly what you're going to need to trade this system, and then I'm going to go through and show you the setup step by step. When we get to this point in the presentation, I'm going to bring up my live charts and ask you to enter a symbol or two into the chat. Anything that you enjoy trading or might be in a trade with now, we can look back and I can show you exactly how this system would have performed on that symbol. And of course, time permitting, we'll answer as many of your questions as possible. Now, before I get into it, just wanted to ask a couple of poll questions just so I know who's in the audience and so that I can tailor my examples to you specifically. Can you please tell me which market you do prefer to trade most? Is it stocks, options, futures, or Forex? Just please take a moment. Type that in. I'd really appreciate it. Great. Thanks, Richard, Brian, Tom. Excellent. Wow, we got a nice mix. Plenty of options traders, as usual. Okay, excellent. And one last question for you. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? 51 to 100, 100 plus? Please let me know. That's great. Thanks for the response. Really do appreciate that. Awesome. Active traders. Excellent. Okay. Let's not waste any more time. A bit of the legal stuff first. Trading can be extremely risky when you don't know what you're doing. Please educate yourself first before trading with real money. And speaking of money, these are the money management rules that we live by. Now, the first one I'm sure you've heard many times: do not trade with money you can't afford to lose. It is worth repeating, but more specifically, it is all about trading with an amount that it feels completely insignificant to you. Trading is so much more about how you manage a trade once you're in it than it is about selecting an entry. And once you're in a trade, you need to be able to remain calm, think clearly, and follow your rules. If it's about the amount of money you have in that trade, you won't be able to do that. So regardless of the amount, make sure it feels completely insignificant to you. Also, never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5%, even 2%. That way you'll still have a sizable trade on, but will reduce your risk considerably. Also, never have more than 50% of your account balance active in the market at any one time. And this usually shocks people, but the real reason here is there are so many factors that are completely out of our control when it comes to the markets, and any news announcement or a catastrophic event such as 9/11 could really drive the markets against you. And so number one, you want to only put half your account in there so that if such a loss occurs, your loss is limited. And number two, you'll have money left there that you can put back in the markets and make back those losses. And with what I'm going to show you today, it really wouldn't take very long. Also, you should spread your trades out. Okay, there are going to be many setups you'll find with this trading system. The whole idea here is to select the 1 or 2 best trades per time frame. You know, recently we've seen a lot more volatility in the markets, and there have been up days where the Dow, for example, is up 300 points, S&P's up 30, etc. On days like that, you're going to get a lot of setups to the long side, and if you jump in and put 5, 8, 10 trades on, and the very next day the market retraces on you, you're going to be in a big hole right off the bat, and that's what you want to avoid. You want to be able to spread your trades out and be very selective. A couple of other sayings we live by here. Number one, you will never go broke taking profits. With each of our systems, we limit our risk considerably. So when you have profits, get used to banking them, especially if you're just starting out. Once you gain experience in the markets, you will be able to stay in a trade a little longer and squeeze out every bit of profit you can. But until then, get used to banking those profits. And remember, trading is never about whether you're right or wrong. Okay? It's all about how much money you make when you're right versus how much money you lose when you're wrong. Now, what will you need to trade this system? Just about any charting platform will do. There are only 3 indicators we're going to plot on our chart. And one of them is the 20-period simple moving average. The other one is the Ichimoku Kinkin-Hoi. Excuse my pronunciation on that one. Although we use a very stripped down version of that indicator. We do not use the full indicator. I will explain in a moment. And then the relative strength index, or the RSI indicator. But again, it's not the default settings, but I will explain that in a moment. So most trading platforms have these indicators. There's no need to go out and spend money on new hardware or complicated charting software. I'm sure you already have everything you need. Now, a few benefits of this system. And number one, it will work on any market, stock options, futures, Forex, again, globally, any time frame, any price level. We've traded this with, $3, $4 stocks. We've traded with the monster stocks such as Amazon, Priceline, etc. You do not need a lot of experience to trade this. It is very, very easy to spot on a chart, has very clear entry and exit points, has very low risk, which I will explain in a moment, and most importantly, it has been consistently profitable over many, many years through all types of market environments. Okay? Now, again, the strategy, there are only 3 components: 20-period simple moving average, and we have tried exponential, weighted averages, etc. We always find that the 20-period simple moving average works best. A very stripped down version of the Ichimoku cloud indicator and the RSI indicator. So let me bring up my live charts and walk you through this. Okay? So here's a chart of Baidu, and in blue here, this line here, that's the 20-period simple moving average. In pink and yellow here is the Ichimoku Kinkin-Hoi cloud, but a very stripped down version. And let me show you what the actual full version would look like, so you get an idea of why we stripped it down. We do use the default settings. We do not change that. All we do is remove some of the lines. There are 3 other lines to this indicator: the Tenkan, the Kijin, and the Chiku line. And we normally take those off, but I'll show you why. It is so much more difficult to read this. Now, over in Asia, they've been using this indicator for many years and actually use it as a strategy in itself. Okay, but this is what it would normally look like. So although there is a method to this madness, for me, it just makes it very messy. So what we use the Ichimoku cloud indicator for is trend, is to identify trend, and therefore we don't need all those lines. We just need the clouds. Okay. Now the RSI indicator generally has a default setting of 14 on most charting platforms. We like to reduce that or cut it in half. We move it to a period of 7. We want this to be much more responsive, so we reduce that in half. Also, the RSI is generally used to identify extreme areas of overbought and oversold conditions. So there's normally a line at either the 80 or 70 level and then the 20 or 30 level. What we do is we remove those and simply plot one line right down the middle at the 50 level. Okay? And I'll explain why or how we use this in a moment. So what you're going to be looking for whenever you bring up a chart are, number one, trend and momentum. How do you identify the trend? You do so with the cloud. So if the candles or the bars and the moving average are clearly above the clouds, okay, the color doesn't matter here, as long as they're above, then you're in an uptrend. If they are clearly below the cloud, you're in a downtrend. And if they're overlapping, you're in a period of consolidation, which you do not want to trade it. Okay? So that's how you quickly identify trend. Momentum, we judge momentum by the slope of the bars or the moving average. This is where we use the moving average. And the reason why we use the 20-period moving average for the slope is because during periods of retracement, you could easily mistake that as downward momentum, okay? Although you can see here in this example how the 20-period moving average maintains its slope higher. It just helps you identify how strong that momentum is. And of course, the stronger that slope, the better, because if you can have just, you know, slight momentum in your favor, but the more significant that slope, the better. And it works exactly the same way to the downside, okay? And then our RSI we use for our entries to identify the setup for our entries. So this is exactly how we would use this setup. What we're looking for is trend, the bars, moving average above the cloud in this case, and slope or momentum, which we do have. Whenever we have those two conditions in place, we then focus our attention down to the RSI. And what we're looking for a long trade is for the RSI to move below and then back above that 50 line. Now, it doesn't even have to go beyond that 50 line, but it does have to at least come back and touch that line. It has to get to at least that 50 level and then move higher, okay? That would identify our setup. So let me mark one here so you can clearly understand what I'm saying. So this bar here, and I will zoom in a moment here, okay? This green bar here, that is the point where the RSI had moved back above the 50 line. So that becomes our setup bar, okay? That's a valid setup to the long side. Now, the difference between the setup and the trigger is that for the trigger, we need to wait for a trade above the absolute high of that setup bar, okay? Should we get it, we go long, and we put our stop just below the most recent low, okay, which would be here in this case. Now, sometimes we get a double dip, which is why with this system we don't put our stop below the same bar. We give ourselves a bit of a buffer. Here is an example of a double dip, this little W formation. In other words, it comes below, back above, and then it goes below again and back above. Now, these are very powerful. When you see this, you tend to get a much more exaggerated move to the upside. So seeing a double dip is a very good thing, all right? Let me give you an example to the downside of a short trade. And I want you to focus on this area, the far left of the chart here. Here we had the bars and the moving average clearly below the cloud, so we were in a downtrend, okay? We did have nice solid momentum lower. Look at the slope of that 20-period moving average, pointing significantly lower. So once we had those two conditions in place, we then focus our attention on the RSI. And for a short trade, we're looking for that RSI to move above the 50 and back below, okay? Or at least come back, touch that 50 and move back below. And it does so here on this bar here. I'll zoom in again in a moment for you. Sorry, let me make sure I have the right drawing tool. Time level. Right there, okay? So then at this point, you're waiting for a trade below the low to get in. If you do, if you get short, your stop goes just above the most recent high. Then it becomes just a matter of managing that trade, okay? What you're going to notice is that most trades that trigger will move in your favor immediately. And it's very important for a couple of reasons. Remember, I mentioned that managing a trade once you're in it is much more important than selecting that entry point, okay? But when you're in it, you need to remain calm and think clearly and follow your rules. Well, if you're in profit immediately, that's going to help you do that a lot easier. And also, I notice most of you trade options. Well, if you enter an option position and it goes against you, that loss in premium, to make that back up, is going to require a much greater move in your favor. So having an option position move in your favor immediately is very, very important. Let's look at a few more examples. Here's a chart of TLT, the 20-year Treasury ETF. Again, what you're looking for is that trend and that momentum. Here we have the bars and the moving average clearly above the cloud, okay? And we have a decent slope in place with decent momentum. So what you're looking for are those pullbacks, are those dips below that 50 line on the RSI and back above for your entry. Okay? Now, in periods like this where it flattens out, regardless of these pullbacks, you do not take this. You do not want this. Number one, this is overlapping the cloud. But number two, we've lost momentum. You can see how the moving average has flattened out. Okay? You do not want to take that. You want to wait for that momentum to be regained and then look at these pullbacks and take these entries along the way here. Okay? See how nicely they would have worked out. Here was a great one. And this one, and I'll show you actually a better example of this, but when you get a move from below the cloud, excuse me, to above the cloud with momentum, in other words, when the moving average crosses the cloud with a slope, you tend to get a more exaggerated move or a sustained move in that direction. And so then all you're looking for are these pullbacks. And again, the degree of that pullback doesn't matter. What matters is that at the time that it crosses back above, you still have momentum with that 20-period moving average. You still have that slope in place. And this one, the entry would have been right here. Okay, and you can see just how nicely that worked out. How easy would that be to manage? Let's look at a few others. Here's GMCR. Now here's a perfect example where we move from one side of the cloud to the other with momentum on our side. This here was a heads up that GMCR was going to be in a sustained down move for quite some time. And what you'll typically find with this is that during a sustained move, you get multiple opportunities to enter here, okay? Just highlight some of these. You can see on these moves above and back below the cloud, okay, there's several here, all of which would have worked out very nicely, okay, in this area, all right, all of which moved in your favor immediately and worked out very nicely, okay? Here's a chart of BPT. Same thing, we have momentum to the upside, wait for that pullback, okay? And boom, you have that nice move right there. Nice, easy trade. That's what we're trying to do, is pick out the high probability setups, okay? There are other ways to enter this and try to ride this wave, but these are the highest probability plays, the most likely to work out in your favor, and that's how you want to do it. Now, one thing I haven't mentioned is that once you're in that trade, okay, as soon as you enter that trade and you set your stop, you no longer look at the RSI. You don't care what the RSI does from that point on. All you're going to do is follow your exit strategy rules, okay, and manage that trade. Whether RSI dips again or not really doesn't matter. The only way it would matter to you is if you're a more aggressive trader and you want to add to your position. In other words, let's look at this example here. Once it crossed from above the cloud to below, and you can see how significant that slope was, so you knew this was going to last for a while, you focus your attention on the RSI, and there are many dips here. Actually, this is a great double dip here, which I showed you the one to the long side that looks like a W. This one has that M pattern, same thing, okay? But all these were valid entries, okay, to the short side, except for this one. See the difference here? The moving average had flattened out. It was actually pointing higher at that point, so you wanted to skip this one. But once it was back intact, you wanted to get in on this one. But getting back to my earlier point, if you're a more aggressive trader and you select this entry and then you see additional setups based on that RSI, you can add to your position along the way. If you're more conservative like me, you simply hold that first position and just manage it appropriately. Here's a chart of UGI. Same thing. Once you get a sustained trend, okay, it just becomes a matter of focusing on that RSI and looking for those dips. Okay, very simple and straightforward. Now, I noticed some of you trade futures. Here's a chart of crude oil futures. Everything stays the same. Settings, rules, nothing changes. You're looking for that momentum and that trend in your favor. Here we are below the cloud, so we know we got a downtrend. We have a nice a nice slope lower, so we know momentum is on our side, and all we're looking for are these moves above and back below the RSI 7. Okay? Any of these would have worked, and actually if you follow the stop loss rule, none of these would have been stopped out. And here was another. See how this one just came back far enough to touch the line and reversed? That's a valid entry as well. Now, if let's say your entry is on a gap, okay, because remember, if that's the setup, we're looking for a trade below the low of that bar to get us in. Now, we did have one day here where it got us in before the gap, but let's say your entry was on the gap. You have to reconsider that trade because of the level of risk you're taking. Your stop is still going to go below, just above the most recent high here, okay? But now look at the difference from your entry to that stop. It's much greater. So if it's too much risk for you, then ignore that trade and move on. There will be plenty others for you to look at. Here's a chart of the Euro futures. Exact same pattern, exact same thing. Many opportunities to enter. Okay. I also noticed there were a few Forex traders. Here's a chart of the Euro-Canadian dollar pair. Again, very simple, very easy to spot. Same rules, same setup. Here's the British pound US dollar. Multiple entries here, right, along the way. Now, you're not going to win every trade. Not saying that. Absolutely, there will be losers, but your losers will be much smaller than your winners. Okay. Now, I notice we have a number of questions here. I'm actually going to bring in our coaching coordinator, Raul. He's going to help me read off some of the questions, and this would be a great time for you to type in a symbol that you want me to look at. I'll be happy to bring up a chart. We can analyze them together and go through them. Raul?
It's always a pleasure to join you. Awesome to be here.
Great.
Let's start with silver for Al.
Sure. Let's look at silver futures for Al. So, again, we're looking for trend and momentum initially, okay? So let's look back here. When we had this move from above to below that cloud, we did so with momentum. So we knew this was going to last for a while. But once we had cleared it, and we're clearly below the cloud with that momentum in our favor, we're just focusing our attention on that RSI, and we get a dip above and back below here, okay? And that is your entry, all right? Here now we get the same thing. We have a sharp move from above to below that cloud with momentum, so we know this is going to be a sustained move. We're just waiting for the RSI here to move above, or at least come back and touch that line, and then turn back lower. Once we get that, we'll have a valid setup. But just make sure that when that happens, that the 20-period moving average is still sloping lower. Okay, very important.
Alfred wants to know about Intel. We were chatting about this earlier this morning.
Yes, we had our live chat with our members, and we were talking about this. But Intel's making some pretty sharp moves. Now, you see through this period here, sometimes when you get a runaway move here on gaps, a lot of times it doesn't pull back far enough to get you in, okay? But that's okay. There'll be plenty of other setups. You can see here in this area, right, we had that sharp move above, and then we had a pullback here, okay? And that got us in, although a very small move to the upside. In all likelihood, this one would have stopped us out, okay? But then further down here, we have other entries in this area. Let me make sure I have my drawing tool here. In this area here, this one would have got you in right in here, okay? There was a subsequent dip over here, although at this point, it had flattened out. So if you had gotten in on the first one, you do not want to add to your position here based on the loss of momentum. But again, you can see how well that would have worked out.
Chowdhury wants to know if you can, he wants to know if you can show the British pound, New Zealand dollar.
Sure, let's have a look at British pound, New Zealand. Kind of a choppy, ugly chart here. This is the type of chart I don't really like to trade, and you can see how most of it is overlapping the cloud, and that's another nice part of this. It helps you stay out of that mess. Currently, it is above the cloud, but sloping lower. It's sloping in the wrong direction, so we have no momentum there. So we need to wait for this to turn here and move higher, and then give us an entry. Or if this downward momentum continues and we move through the cloud with sharp momentum, then we know we're going to get a sustained move to the downside and focus on short entries from there.
TJ, Nick, Jess, I do see your questions, and I will get to them shortly. I've got JC, who's got 3 symbols.
Sure.
I'll let you pick your favorite,
Okay.
Netflix, Amazon, or BIIB.
I don't know, and let's see. They're all monster stocks, so let's look at BIIB here. Again, kind of choppy, in and out of this cloud. Then once we break through with momentum, that's the key, remember. That's a heads up, this is going to last. We then look for our entries, okay? And we did have the very first one right in here. Let me just mark this for you. The very first one came early right in here where we entered, okay, in this area. And there were subsequent moves throughout this one. It had kind of flattened out, so you could have held off on these ones. This last one was decent right here. That had its bit of a slope back. But right now, this is starting to set up. So you might want to keep BIIB on your watch list, okay? And look, the next couple of days, if we get a move back to or back above that 50 line on the RSI, as long as that 20-period moving average is still sloping higher, then we've got a valid setup to the long side for BIIB. And this one, when it does move, it can make a significant move. So you want to keep an eye on that one.
Gene, John, I do see your questions. I will get to those as well. Michael has asked me twice now for GLD. So this is just proof that persistence pays.
Yeah, absolutely. Here's GLD. Now, unfortunately, here, and this will happen, sometimes when these moves happen very sharply and you get these sharp pullbacks, we tend to lose momentum, and so you don't get a valid entry. Right now, here, again, we've gone through that cloud with very significant momentum. This is what stands out to me. So this tells me that gold is in for a sharper move lower. Now, we've been talking about this in our nightly videos with our members and actually looking at the monthly chart on gold, on the gold futures. And it wouldn't surprise me if gold is in for a retest of not only the 1,000 level, but also the $700 level. Now, that, of course, will take several months to happen. Won't happen quickly, but based on this, I think we're in for much more pain in gold. And so what you want to look for are those pullbacks and those moves back above the 50 or to the 50 and then back below for your entry. So keep gold or GLD, the ETF, on your watch list going forward.
Lewis is asking about CTIC.
CTIC. CTIC, okay. Well, there were entries in here. Let me just mark them. Right in here, you see, there's that one there, which happened right around here, and this one here as well. Yeah, right around this candle, right in here. Let's see if there was anything else. This one was in the cloud. Now it's moving from below to above with decent momentum. and we're starting to get a pullback. So we might be in for an entry here very soon on CTIC. This is a biopharma stock, so you might want to keep an eye on that as well.
Greg wants Facebook.
Facebook, that's a favorite of many people. Let's have a look at Facebook. And yes, Facebook had given us a very nice entry back in here, back in July. You see right in here, very nice move with momentum, and that worked out very nicely. There was another dip here, although we had kind of flattened out on our momentum there. You could have taken a pass on that one, and then had another one back in this area here. Yeah, right in this bar. Right now we are moving again, or have moved above the cloud here, and we're retesting it right now, so we're hoping to get a signal very soon on Facebook as well. Now this does work on different time frames as well. I don't know if anyone's been asking.
I was just going to ask you that. Yep. A few people have asked whether it does work on smaller time frames.
Yeah.
And Tina was the one that was asking about the US dollar, Canadian dollar on a 1 minute chart. Can you show that?
Sure, let's see. Now, the time frames, if you're trading intraday, that tend to work best are 15-minute and hourly, although we have many members who trade it on a much shorter time frame. So let me first show you here on an hourly. Again, the same thing. Now, we've lost some of the slope because I've zoomed in, but same rules apply. You're above the cloud. You've got momentum, you get that pullback, or that dip here, and off it goes, okay? Now if we switch to a 1 minute, let's see. Let me zoom in because this is way too much data here on the 1 minute, and here it works very well. We're moving from below to above with momentum, same thing. You're looking for those dips or those double dips, which work out even better. Right here in this area, okay, with momentum, and off it goes. You get subsequent dips. You can add to it if you're more aggressive, or you can just maintain your position, but you can see, again, the kind of move there on that 1 minute chart. And again, the time frames don't matter. The markets don't matter. It's straightforward technical analysis. So it will work on any market, any time frame. Okay, let me just, because I know we're limited on time, I think we're getting close to the end here. Let me wrap up and come back to my presentation here. I just want to recap what we've gone through here, what I've showed you today. So that will work on any market, stock options, futures, Forex, okay, any price level. You saw how easy it is to spot, and once you get used to this, it'll be very, very quick for you. Okay, it's strong enough to be a standalone system on its own. We've traded with this for many, many years, but it can also be a great complement to whatever you're using. You saw it also tends to move in your favor immediately, which is huge. And actually, there was one rule I just realized I missed, and which is a very important one, and I'll go back and explain it to you. The majority of trades that don't work out here are not losers. They're just negated trades, okay? I will explain that in a moment for you. But I noticed there's a ton of questions, especially on exit strategies, and I wish I had enough time to cover everything. Unfortunately, I don't, but we do have a class coming up next Friday, March 20th, 1 p.m. Eastern. It's a 2-hour class. I'll be teaching this class myself, and it will be recorded if you can't attend live. But what I'm going to show you is the complete system from entry to exit with 5 different exit strategies I'm going to show you, but we're going to focus on the one that myself and the other traders use. Sorry, is there a problem? Oh, I believe there's a problem with the audio. Is there okay? Can you please type a Y or an N if you can hear me? Can you hear me clearly? I'm being told there's a problem with the audio.
Yeah, Vince, you're coming through fine for me on my end.
Okay, great. Thank you very much. Sorry about the interruption. Okay, so I'm going to show you again the complete system from entry to exit, and I'm going to focus on the exit strategies that we use on a regular basis. I'm also going to show you how you can really leverage this with options. Many of you trade options here. I'm going to show you, tell you exactly what kind of expiration you should be looking for, what kind of delta you should be looking for, when you want to buy a long call or put versus selling a credit spread. We're going to cover all of that during the class. We're also going to do a live search for trades. I'm going to share my watch list with you. We're going to go through chart by chart together, looking for trades, setting up for that coming week. That way we can all walk away with some trades to put on the very next week. And as a bonus, I'm going to include a class that we normally sell separately for $297. It's a class on the Ichimoku Kinkin Hoi indicator. Again, over in Asia, they use this as a strategy in itself, and I will teach you how to use that indicator as a separate strategy. But we'll include that as well. The link for this class is tradingwins.com/move. Now, before you sign up, let me tell you exactly what you're going to get so you know that it's right for you. Okay? About 30 minutes after you sign up, or when your order is fully processed, you will get an email with a link to a recording of the previous pro class we did. So you don't even have to wait till next Friday for this. You can watch it and start trading with this right away. Regardless, we're going to save you a live seat at next Friday's class, and we are going to also include a 30-day membership to our pro service. Now, our pro members receive videos from us every night from Sunday to Thursday, recapping what happened in the markets that day, where we think things are going, and we also review our open trades and highlight new trades, not just of this system, but from all the systems we have. We also issue trade alerts on any trades that we are going to take, both the entries and the exits. And something we started recently, we have a live market chat every Thursday from 10 to 11 a.m. Eastern, which is recorded, so if that time doesn't work for you, you'll receive the recording. And we had one this morning, fantastic class. You get to come in the room, ask me any trading-related question you like, and through that hour we go through dozens of charts and cover many, many different topics on technical analysis, so it's a great class. Altogether, $988 value, but all we're asking for is $97. We really want to give you a look at what we do here at Trading Wins, and hope you join our team. And so again, the link is tradingwins.com/move. Now, we do have to limit this class to 25 people because our whole goal for that class is to answer all your questions and make sure you fully understand the system and can walk away with it, trading it like a pro. And so that's why we do have to limit it. Again, this is what you're going to get in the class. And now, I believe we have 5 minutes left. We'll answer as many questions as we can, and I'll go back to my charts in a second and cover that one rule that I missed for you. Okay?
All right. Lots of questions. I'll go through them as quickly as I can. Are all your charts daily charts on the examples that you've shown?
Yes, these were all daily charts, except for those few during the Q&A with the 1 minute and so on. But yes, they are.
Nick is asking, can you cover what you removed from the Ichimoku indicator?
Yes, I removed the 3 lines, the Tenkin, the Kijin, and the Chiku line. Okay.
What time frame do you suggest best for using this system? That's from Felix.
We trade the daily most, but again, any time frame will do.
Okay. Gene's asking, how do you deal with gaps? Excuse me, John was asking.
Gaps, again, if you get the gap on the entry, you need to reassess your level of risk based on your stop loss. Make sure it's appropriate for you. Otherwise, it's fine. I do want to cover that one rule if I can quickly. So when you get an entry like this, be it short or long, okay, this is your setup. Your entry is based on getting the trade above the high of that setup bar to get you in, okay? Should it trade below the low of that bar first, the trade would be negated, okay, or disqualified. That one rule alone will save you from most of the trades that would have been stopped out, okay? So again, most of the trades that wouldn't work out with this are not even losers, they're just disqualified trades, okay?
Jeff wants to know how quickly will the pro subscription be set up and what happens after 30 days?
The pro subscription usually takes about 24 hours. You should receive all your login information sometime tomorrow. The recording of the previous class you should get about 30 minutes or so after your order is processed. And as far as the 30-day membership, if you're enjoying the membership at the end of the 30 days, you don't have to do anything. It will automatically renew at $97. But if you'd rather not continue for whatever reason, just give us a call and we'll put a stop to that before the end of 30 days.
How do I know the system is right for me?
Well, you know, I get this question a lot, but really it comes down to the individual. And the fact that you're here spending your time. You've obviously shown the commitment to learning, and I think that's why it's perfect for you, because this is for anyone who wants to make a consistent living at trading. And again, we've traded this over many years through all different types of markets, and it would be perfect for you.
We seem to be having some sound difficulties, so we'll ask Vince to repeat that.
Okay. If you entered, the question was, how do I know this is right for me? And I was saying, if you're on here, you've obviously shown the commitment to learn a system. And this is designed for someone who wants to make a consistent living in the markets. This is a very safe way of trading, and that's why I think it'd be perfect for you.
I want to say thanks to William, Louis, Mitch, Bruce, Robert, Mark, Guy or Guy, Robert, again, James, Nancy, all for signing up. Do appreciate it.
Yeah,
Looking forward to seeing you on the 20th.
Great. I just see one last question, and it's from TJ, who's asking if we get permanent access to by the review. I hope you mean the course. Yes, you do. Once you've bought it, it's yours. So yes, you do.
Michael asked, do you have a program scanner for setups on TOS?
No, not yet. A few of our members have programmed it, so we do know it's possible. We have plans for that in the near future. Right now, we're having our indicators and scanners programmed by Metastock. Those will be out very shortly, and then we will be adding those to the different charting platforms.
It's tradingwins.com/move. If you are having difficulty, and I see a couple of people saying they're having difficulty with the ordering, you can call us at 1-888-574-2426. We will put that in the chat. Sorry, we're hurrying a little bit. We've got about 2 minutes left. Can you scan this with NinjaTrader?
Yes, it's a very easy scan to set up, so yeah, it will take some programming, but yes, absolutely.
Okay. One of the other members was asking how much of the discussion during the session on the 20th is going to be on options.
I will tell you exactly how we trade this with options and how you can leverage it. Again, we won't have time for some of the more sophisticated strategies like butterfly spreads, etc. But I will tell you when you should be looking at a long call or put versus selling a credit spread, and what kind of expiration and delta, etc. So,
from Philomena, do you really limit this class to 25 people?
Yes, we do. Again, there's just like here, there's a ton of questions, and there's so much material to cover during those 2 hours. That's another reason why we send out that initial recording of the previous class, so you can watch it and hopefully get most of your questions answered. But whatever you don't, bring those questions to this session, and our focus is to answer all your questions.
Question from Jeff again. So we've got, just watching over here, and they're saying we've got about 5 more minutes.
Oh, great. Okay, we'll answer more questions.
Okay. In your charts, one of our members is asking, what's the light blue line called?
That's the 20-period simple moving average. Okay.
Okay. Follow-up question: why not use exponential? Why use them?
We've tried it. We've tested it over the years. We've tried exponential. We've tried weighted, and we've tried different periods as well. But what we always find is that the 20-period simple works best. That's probably because it is the most widely used moving average, both from professionals as well as retail traders.
2 difficult questions for you. 1, Vince, you're obviously a successful trader. Why do you need my $97?
This isn't.
That's from you.
It's not about that. You know what? I trade with this all the time. I make a very good living at trading, and what we're trying to do here is discount it for you, make it easy for you, and give you 30 days to have a look at what we do at Trading Wins. We're much more interested in you joining our team and seeing exactly what we do here. It's all about that.
How quickly can I make back my $97? That's from Robert.
It really won't take long. In fact, we've had great feedback from our members who have taken this course as well as others, and just with the trades that we walk away with from the class, people have made many times more than that. You know, with one option contract or a single lot to make back 97, it usually takes less than a trade. Really.
Folks, I apologize if I can't get to your question, going as quickly as I can. Will the recording of the session on the 20th be available? I'm sorry, I can't attend in person.
Yes. So you'll receive the recording of the previous class we did, as well as the live class that you have a seat for on the 20th. You'll receive a recording for both.
Whitney wants to know, he's a current member, is he able to retake the class at no charge?
Yes, just give our office a call again. Those limitations are an issue, but we'll get you into another class if necessary.
Question from Phil. How often do you have your market chat?
Every week. We have our market chats every week, Thursday morning, 10 a.m. Eastern to 11, and those are recorded as well, so for anyone who can't attend live, you'll receive those every week.
Vince, I bought one of your other systems in the past called Our Favorite Trade Setup. Will this system complement it, or is this system completely different?
Well, it is different, but it is based on trend and momentum again, so it's a very good complement. And actually, since we keep our charts very clean on both setups, you can actually spot both at the same time with either chart layout. So, yeah, it's a good complement.
Can you do one more chart for me?
Sure. Let me bring up.
Harold's been asking me about this. Now,
Yep.
I got to preface it because I'm going to make you laugh.
Okay.
He's been saying that he's in love with the cocoa, so he wants to know about cocoa. CC.
CC, okay. All right. Well, you're talking about futures then?
Yes.
CC, sorry. About Circuit City. Here we go. CC. Kind of a very choppy chart here. Unfortunately, we didn't get many. Well, we did get one here. But it was kind of overlapping the cloud still at this point, so would not have suggested this, even though it worked out really well, would not have suggested that. Here, you can see we had the entry, and but our momentum wasn't very strong, okay? And actually, it was in the opposite direction, so you wouldn't want to take that, okay? So in this stretch, there was no trade here. What I do see is that we went through this cloud with momentum, strong momentum here. So I would expect cocoa to start trending higher for a sustained period of time. Now, having said that, it's dropped back, but it looks like it's holding that cloud. As long as it holds that cloud and we regain momentum here, we could be in for some nice signals going forward on cocoa. So
You're not in love with it right now.
No, I'm not in love with cocoa. I prefer much cleaner charts. Let me show you the difference. See here, this choppy back and forth? Look at a chart like this. This is so much easier to trade, right? Just a nice slow grind in one direction.
It's awesome as usual. TradingWinds.com/move, 1-888-574-2426, info@tradingwinds.com. I hope you can join us. It's going to be a fantastic session. I'm going to be there with Vince, fortunate enough to help him out with these kind of sessions. I hope you can join us too.
Great, and I want to say thank you first of all to everyone for taking the time to be with us today. Thank you, and a big thank you to Reed and everyone else at Investor Inspiration for having us on, and hopefully we can do this again.